Hello and welcome 11 Commerce students. Today in this class I will continue with some important salient features of cooperative society from the business studies first unit test syllabus. So last day also we have started these salient features of cooperative society, and today also we will continue with this topic because we have focused in four features. I have taught you about four features, that is, it is a voluntary association, then it is neutrality in the case of religious and political matter is maintained in this cooperative form of organization. Also service motive is there. No profit motive, it is not backed by any kind of profit motive. So these type of features we have already discussed. Today we will discuss the rest of the features, the remaining features, which are also important. So talking about the first important features for today is equal voting right. Equal voting right. It means that every opinion matters. Every opinion matters. Equal voting right means every individual opinion matters. Now, management and control of a cooperative society lies in the hands of the managing committee. Now, the member of this committee are elected by the members of the society. That means the members of the cooperative society decide who will be the managing committee or which member will constitute the managing committee. Now, all the members get only one voting right, irrespective of capital contributed by them. The organization of a cooperative society is democratic, and all the members have equal voice in the management due to their equal voting rights. That means they can express their opinion. Everybody has the equality of expressing their opinion. Everybody has equality in taking part in the decision, and everybody has their individual voting right. So this is one important feature. Next feature is separate legal entity. Separate legal entity. What does this mean? A cooperative society is required to register under the Cooperative Societies Act 1912. You must remember this act, that Cooperative Societies Act was developed in the year or established in the year 1912. Like Companies Act 1956, like Partnership Act 1932, Cooperative Societies Act was established in the year 1912. So cooperative society is required to register under this act, Cooperative Societies Act 1912. After registration, the cooperative organization gets a separate legal entity, a separate legal identity, which means that the organization will be treated as a separate individual from its member. Member's liability will not be considered as the firm's liability. Firm is having a separate legal entity, and the members are separated from those. Members are individuals, and the firm is also having a separate legal identity or entity. It can hold, buy and sell property with its own name, or can enter into a contract of its own name. The society can sue others and also can be sued by others. After registration, the life of the cooperative society does not affect death, insolvency or incapacity of any kind of member. It is not dependent upon the insolvency or incapacity of any other members. After registration, it is an individual firm, and the firm will act as an individual identity. So this is another important feature. Talking about the next feature is limited liability, which is different from sole proprietorship and partnership. Limited liability. What does that mean? The liability of the members of a cooperative society is restricted to the extent of capital contributed by them. But for this purpose, the society will have to use the word limited after its name. Limited, the word limited has to be mentioned after its name, and capital contributed can be extended according to the capacity of the firm. So unlimited liability is not there. Firm cannot take to an extent of unlimited liability with the name of the members associated with it. It cannot happen like that. So limited liability. Next is transfer of share. What does that means? Transfer of share means what? The share capital contribution. Share means capital contribution of cooperative society is not freely transferable. A member can surrender his share to the cooperative society with the permission of the other members, of the office bearers of the cooperative society, and with that he can surrender his share, but he cannot transfer his share to any other people, any other outsider, as he wish to do. If he wish to transfer, he cannot do that. He need to take the permission from all, and then he can surrender only. If he doesn't wish to stay long in the organization, he can surrender his portion of share, but he cannot transfer easily his part of share to any other as he wishes. He cannot do that. He doesn't have the right to do so. So another is distribution of surplus. Distribution of surplus. Surplus means the nominal profit that is earned by the business to maintain the business running, to keep the business running. The profit, the little profit of the cooperative society is distributed not in proportion to the capital contributed by the members, rather it is based on the volume of the business transaction by a member with the cooperative society. A member with a small capital contribution can receive a relatively large share of profits if he has large number of transactions with the society. That means it is based on totally the transaction and the number of transactions handling. If somebody is having a little contribution, little capital contribution, but he is handling more number of transactions, can earn a relatively larger amount of portion. But somebody who has contributed more but does not held so much transaction, does not transact so much with the business, will get a relatively smaller amount of profit. So receiving of the profit or earning of the profit share depends on the number, the relatively the number of transactions held by each member, and not depending upon the capital contribution. So transaction is main. The one who is having more transaction with the society will earn more profit, and it is not depending upon the capital contribution. Somebody may contribute more, but does not, being not able to have more transaction, he will not earn the profit as much, though despite the fact that he has contributed maximum. So for example, in a consumer society, the consumer who makes more purchases gets maximum benefit. Only a limited dividend up to 10% is distributed on share capital. So member with large capital contribution may not have a transaction and may not have the maximum portion of the surplus. This is how it works. So these are again the important features of the cooperative society. In my next class, I will come up with some other topic related to this cooperative society. Till then, goodbye.